All right, and we're live. How is everyone doing? Welcome to the live stream. Guys, give me a quick note in the comments down below. Can you see me okay? Can you hear me okay? We do not have a normal live stream today. We've got a very special guest, Ken Mack, right here. How you doing, mate? You good?
Hey, what's up, my man? It's great to be here. Hello, everybody.
Ken Mack is a very, very cool investor. And why don't you introduce yourself?
Yeah, investor, entrepreneur since I was your age, 21 years of age.
Yeah.
Started out in the game of making money, building wealth, generational wealth. And entrepreneurs can do many different things, serve many different functions. So I've been a well-diversified entrepreneur all of my life. And of course, crypto is one of my passions as well. So it's great to be here on the show and be here with you today, Sammy, in this beautiful building, the Burj Khalifa, with this billion-dollar view right behind us here.
It's quite something, isn't it?
Yeah.
So guys, because we've got two people on stream today using the same microphone, I just need to know from you, can you hear Ken Mack okay? Can you hear me okay? If you need me to adjust this on the fly, I've got your comments up as well. But we're going to start this off just with some of the regular analysis that you guys want me to go through just before we get into the discussions here. Ken Mack has a lot of amazing knowledge, so stick around for this. I am very, very excited for this one. Okay, so here's the thing. Bitcoin has started to climb up just a little bit right here. If we look at this on the 1 hour time frame, we've started to punch up a little bit. We've actually managed to rise above $20,000 so far. That looks like yet another deviation. We've now formed 1, 2, and potentially 3 deviations right here over the last week. This also coincides with the dollar dropping down. So this is something that we were looking at quite a bit. And if we zoom out a little bit, it still looks like an absolutely ridiculous parabola. The dollar has just continued to skyrocket very, very high and potentially now in a little bit of a retracement. If we zoom out, to me, it's looking like the dollar needs to drop by a lot more in order to capture more support, but it really depends on what kind of time frame you're watching this on. The SPX, as predicted, this was a very easy prediction that you guys heard from me in the last few videos, kind of reached its area of support. It didn't actually quite penetrate into the area, which is what I was expecting, but we did reach that area of support, and now we are quite aggressively moving up. So you guys heard me saying this quite a lot over the last videos and so on. The SPX cannot keep dropping down in a straight line forever. Yes, of course, the trend might be down. It might be very low that we see the SPX going down to, but we're not going to be falling in a straight line. And so we are getting a correction, and this is actually quite a substantial correction. You take a look at yesterday's candle, and okay, that was all right, nothing crazy. Today's candle, we gapped up super high and we're still climbing higher, and it's not even done yet. We've got another 3 hours left until this market closes right here. So there's a lot going on with the S&P 500, and unfortunately, we're not actually seeing that strength reflected with Bitcoin right now. I'm not too worried about it. I think that if Bitcoin is able to just kind of punch above this green line right here at 20.1, 20.2, that's where things can get really crazy, guys. This has been a ceiling for Bitcoin for a little bit of time now. If we exclude this weird price action that happened right here, Bitcoin hasn't been able to rise above this line now since the end of August. So if we actually measure this and take a look at how long we've been stuck here, that's 40 days that Bitcoin hasn't been able to get above 20,200, which to me means that the instant we're able to do that, we could be looking at quite an explosion. And the question becomes, okay, well, where do we rise up to? And that's just going to be a case of what are the next resistance levels. So, if we take a look at some of my key indicators that aren't actually loading up right now, we've got quite a bit of resistance kind of just dotted around this $20,000 area. Let me see if I can bring this up for you right now with the VPVR. Bam, take a look at this. So let's take a look at where some of these resistance areas are going to be on the 4 hour time frame. And you can see some really nice consistent spikes right here. So 21.3, 21.4 looking like a pretty obvious area of resistance, 23.1, 24,000. None of these areas are new to us. We all know about these areas already. So I do think that if Bitcoin is able to get above this, we could be looking at quite a nice rise. But for now, we are still at resistance, and we're at resistance within a little bit of a downtrend. So Ken, I actually want to bring this over to you. What do you think about this chart? Do you want to give us some Bitcoin analysis? Do you want to take over the laptop as well?
Yeah, so got to remember we're in a bear market. 20K is proving to be pretty strong resistance at the moment. I'm expecting us to take a leg down to 13.9k on the charts, but it could be argued that 17.3k I think is where we bottomed out. Could be the bottom. Do you think 17.5, 17.3k could be the bottom for Bitcoin, or do you think we'll get further to fall?
It's not a question that I like to speculate because it's very, very hard to say. Just top left tab here. It's very, very hard to say, but I certainly think that if we revisit those levels, then yeah, we're probably dropping significantly lower. For now, I don't even want to speculate on if that's the low or not, because that's just not the kind of style of analysis I do.
Yeah. As it stands just now, I'm dollar cost averaging into Bitcoin anywhere below 25k. So my buying levels have been 17.5, 18, 19, 19.5. So I'll be buying all the way up to 25k, but I am expecting the markets to pull back towards 13.9k. 10k is possible, but it all depends on the DXY. We've seen the DXY pull back to about 110. What is your DXY here?
If you scroll down, you'll find it right at the bottom, right down there.
Yeah. So this here is something I'm paying close attention to. I'm expecting the DXY to rebound and go north very soon. I can see the DXY heading up to 120. And between 120 and 150, this is very, very possible. And if that happens, this is very, very bad news for the markets. And of course, when the DXY is pumping, all asset prices are going to be dumping. And what's actually happening there, as you guys probably know, is that's all other currencies being devalued against the US dollar. And it also could be argued that right now is probably the best time to be buying into assets and securing yourself with assets. Now, it wasn't Bitcoin created for times like now.
Absolutely.
So it is a big, big test for Bitcoin. But for me, Bitcoin, gold, silver, land is a big thing on my radar just now. So I'm doing everything that I can to stack up on all of these assets. But of course, been very, very careful, because nobody can predict exactly where the bottom of Bitcoin is going to be, where the bottom of gold is going to be. We can speculate that gold is 1400 to 1500, that it could come down there as the next technical level, if we want to pull up gold.
Okay, but big bounce today.
Big bounce today, yeah. But there we are. See, your levels are set right at 1371. So I am expecting, if the DXY continues to pump, which it's showing no signs of stopping anytime soon, we should pull back to this level here that you have for gold at 1600, and then down to around about the 1400 area. But I am expecting very, very soon gold to make a big comeback going into next year. Now, gold is a very, very slow moving asset, which is why we call it a safety net. You know, gold is very misunderstood, and it should never ever be compared to Bitcoin. Gold is an insurance policy. And gold is something that stood the test of time for 5,000-6,000 years, and it's something that I've been stacking consistently since many, many years. But when gold finally decides to break out, I am expecting gold to reach levels between 2,300 and 2,500, providing the DXY continues to pump. Now, when you let's take a look again at the DXY. I'm going to be bouncing between some of these charts here just now. Okay, clicking all. So yeah, 1968. This is a very, very scary looking chart. We've broken this level only once, twice, 3 times in history between now and 1968. And there we are. So 120. As soon as we start reaching levels of 120, which is not far from where we are just now, we are talking. Let me just get the ruler. There we are. Okay, so we're talking like it's 5% away, so it's nothing. It's absolutely nothing. So this is going to happen. So when that does happen, that's the time where we should see Bitcoin pulling back to about 17k. That's the time where we should see gold pulling back, and of course we'd have that very important property crash as well, because all of the prices just now are artificially inflated in all asset classes. Gold, I believe, is severely undervalued. And I'm bouncing between all of the different bits and pieces here, but gold is severely undervalued because it's heavily manipulated by Wall Street. But let's say that we do pump up to, God forbid that we don't, 164. I really hope this doesn't happen.
That's doomsday, isn't it?
This is doomsday. Like, the dollar will literally implode if this happens. But let's say we reach 40%, which is going to take us up to 155 level. This is going to be a very, very sad day, and this could be the end of the dollar. And if we take a look at what happened back here, okay, let me just take off the ruler. Back in 1984.
It'll keep coming off. You gotta press that.
Oh, there we are. Okay. So yeah, 1985, we topped out in the DXY, and it took was it 4 years until 1987 to bottom out here on the DXY. I'm expecting something similar to happen, but what happens when we crash is another question, and this is why I am stocking up in lots of different assets. Like today, for example, I was pumping out videos on my Instagram asking people in Poland if they have any connections for farmland, agricultural land, or woodland. So I'm looking at all of these different asset classes. I believe that being exposed to one asset class like crypto or like Bitcoin is extremely dangerous. So I'm looking at all the different types of asset classes that I can start to allocate and spread my wealth. So you get the gold, and that's going to give you the insurance policy. You get silver, which is a little bit more speculative. To put it into perspective, let's say you're going to liquidate a little bit of gold. You're talking 2% from spot, so that's not too bad. If you want to sell your bar of gold, you're going to be 2% off a spot. If you want to sell your silver, you're talking anything up to 15% that you will be losing from spot. So every different asset class has its different risks and its different functions, and that's a very important thing that you guys need to understand. Bitcoin, of course, is my favorite asset class because this is where the most gains can be realized. But how Bitcoin is going to how it's going to be behaving over the next few years. And when I say the next few years, I use that term very, very lightly, because I believe that we are in for the biggest financial collapse in the history of the world. This is going to make the Great Depression of 1929 look like a fart in the wind in the cosmos of time in comparison to what's
very
coming.
Poetic with this. I want to hone in on some of what you're saying, because you've jumped between like 6 different huge things. The first thing that I'm curious to talk about, just while we're on this chart, is the dollar, especially because this is something that my viewers have heard me talking about quite a bit over the months right here. So we've seen a really, really big rise in the dollar, and it's corresponded to, for the most part, a big drop for Bitcoin. The inverse correlation is very, very obvious. I've shown many charts for it, but I don't have any of them pulled up right now. And this is something that you guys are very, very familiar with. Now, if Bitcoin ends up going up to 120, you mentioned that could kind of correlate with a $17,000 Bitcoin. I'm totally on board with that. What do you think it's going to take in the world stage to get from here up to here? And before you answer that, guys, we don't have enough viewers in this live stream right now. We usually are like 3, 4, 5 times higher than this. I need you guys to smash up those likes as we're in this live stream right here, so that we can get this live stream pushed out to more people. YouTube's content delivery system is horrible, and so I need your help to show YouTube that this live stream is getting a little bit of engagement, so that we can push this out to subscribers. But Kemak, I want to know from your perspective, what do you think will take the dollar from here up to here? What is the world going to look like? Because this is basically just the dollar versus other currencies. This is not the dollar versus Bitcoin. This is the dollar versus other currencies. What do you think needs to happen to make this 40-point gap?
They are going to be doing everything in their power to defend the dollar. They printed so much money over the last few years that they need to take drastic action to defend the dollar. Like, we're talking 30% of the US dollars, 40% of the US dollars in existence that have been printed over the last 2.5 years. I don't think they're going to stop printing money anytime soon. In fact, they've just turned on the money printers.
So when you say they, you're talking about the Fed, right?
The Fed,
Federal Reserve.
yeah.
Okay.
Yeah. And on the Feds, a great book for you guys to pull out to understand how the Fed operates, which I'm reading just now, is called The Creature from Jekyll Island. Have you read that book before?
Not yet. I need to.
Yeah.
Tell me about it.
I haven't read the book yet,
okay.
But I've just started the first chapter. It's been recommended to me by many, many different people. So that's one book that I'm reading just now about the Fed. But when they turn on the money printers, that's when all hell is going to break loose.
Guys, I'm curious in the comments, how many of you guys have read The Creature from Jekyll Island? Can you let me know right here how many of you guys live have actually read that? Because that is something I'm curious about. It's something I've wanted to read for a while. And from what I've heard, it's compulsory reading as traders in Bitcoin and so on. Yeah,
well, any reading is compulsory for anybody who wants to build wealth. And just kudos to you, Sammy, for putting on this show, because it's here to help you guys understand what's happening in the world today, and the more people that you can get this content out to, the more people that we can help. But yeah, what's it going to take? What's it going to take to get the dollar up there? I reckon we're going to get a replay of what happened in 1929. So that was a 10-year event. So I believe that this event started in the year 2020. It was a planned event. I'm not going to lie. I believe that everything that's happening now was manufactured, pre-planned, and they knew exactly what was going to happen, and they know exactly what's coming. So this ain't going to stop anytime soon. I'm a firm believer that we're going to be looking at least another 8 years worth of not recession but depression, and as that this is just the beginning. Okay, this is just the beginning of what's to come. But we're going to be looking at mass unemployment. We could be looking at banks collapsing. I don't like to be doomsday Ken, but just over the past few days, I've been taking sight of some news from a couple of banks, Credit Suisse. So they are not looking in a great position just now. I'm still doing my research on it.
Deutsche Bank
is another, but Deutsche Bank, they've been a little bit shaky for many years.
Oh, yeah.
So this is not something that's happened recently. But what happened back in 2008, we're looking at a replay now. So we're literally replaying what happened in 2008 right now.
It's like seeing dominoes one by one falling, right? So like Credit Suisse had no problems up until a few days ago, and now they're making headlines, and it's just it keeps going like this. There's new players every single day. Virgin Money, they stopped doing lending options like as of a few days ago.
They pulled the mortgages in the UK as well. So this is a major warning flag.
Yeah, all these warning flags are going up right now, and we're in it right now. It's almost why I think it's hard to pay attention to is, when we look at this with hindsight, if we're a few months ahead of this or a few years ahead of this, we can look at okay, a bunch of shit started going wrong in 2022. This is where all the things started to implode. 2020, money printer was going absolutely fucking crazy. Markets were exploding because of it. 2022, reality started to set in, and obviously all of that unsustainable action has now started to show itself as show itself with its consequences. We're in those consequences right now. Lots of these big red flags coming up, and that potentially. I mean, I'm curious what kind of. I don't even know myself. This is why I'm asking you, which other flags would come up. I mean, I think one of the big ones, something really interesting that we've seen is you look at Venezuela with its currency. This is something that I've been focusing on a lot on this YouTube channel. It imploded, a couple of years ago, and then we had Zimbabwe, and I'm not getting this in order. We had Zimbabwe, we had Sri Lanka, quite recently with a similar crisis. The Turkish lira, Lebanese pound. Now it's happening in the West. Now it's happening to the euro. Now it's happening to the pound. It's happening to the Australian dollar. It looks like a lot of damage has already been done, and we haven't even reached 120 yet on the dollar index.
Yeah, and this is why you need to you need to stop comparing the dollar to the value of certain assets like gold. I would far prefer to hold a bar of gold that's losing against the US dollar, but holding that long term, because at the end of the day, guys, you've been brainwashed to believe that this piece of paper is worth something. It's a piece of paper that's come out of a printer that they've weaponized, and they've told you that it's worth something. Yes, you can use the dollar to buy foods, but at the end of the day, what if we have a replay of the Venezuelan situation with the US dollar, and then nobody's going to be accepting it and weaving, baskets, and making baskets out of the paper, the bolivara. It's crazy. So the art that they were making with the paper currency was worth more than the actual currency itself. And what are they doing in Venezuela? They're actually shaving off pieces of gold to pay for their groceries, to pay for haircuts. So that is a unit of account. So for you guys, something to go away and think about is, how can I diversify my wealth across the board? I need to come out of currencies and into what? Real estate. Yes, it's a little bit shaky just now, but number one for me is land. Land and farmland is the number one investment. You can't eat Bitcoin, you can't eat your gold, but you can eat off the land. So land for me is one of the most important investments. The second most important investment for me is gold. The third most important investment for me is Bitcoin, because Bitcoin is This is the people's currency. This is sovereign money, and we all know that it cannot be manipulated. Well, I was going to say manipulated. It can be. The price can be manipulated, but they can't print more bitcoins into existence. We know exactly what the supply is, and the economist for Bitcoin is the on-chain metric. So we can see exactly inside the cogs and the mechanics and the plumbing of Bitcoin in the crypto market. So that's what I love about crypto. You can see all of the mechanics. But we've got to remember that the paper currency is it's the Fed's money, it's the government's money. But the Fed and the government are two different things, aren't they?
Absolutely.
The Fed is a privately owned organization. But gold, it's God's money. I sound a little bit like Robert Kiyosaki here, but he's absolutely right in what he's saying. But yeah, interesting times.
It's something that so I see some of my viewers are a little bit confused by this. They're wondering why, just curious about the gold more important than Bitcoin question. I actually take a somewhat different stance. I think that they're quite similar in terms of their core properties. I mean, medium of exchange, store of value, and so on. To me, Bitcoin's just easier to use. You can just move it around a lot easier. But I think one of the core problems is it doesn't really have that 5,000-6,000 year track record. Which is one of the reasons that it's getting decimated. And it's when the market is tanking, Bitcoin is falling really, really hard. You don't see these kind of crashes with gold, right? It's obviously just a far bigger asset. One of the things I want to just jump in with gold, though, is you mentioned that your target would be kind of like 22 to 2,500. Is that right? 23 to 2,500?
23 to 2,500 is what I'm looking at for gold. But you've got to remember, right, with gold, this is an insurance policy. You never, ever buy gold or a kilogram of gold and think, this kilogram of gold is going to be worth X amount in 10 years. It's simply just, it's a hedge against inflation. Some could argue that gold hasn't done anything in the last 10 years. It's maybe down 2%. But again, you're not buying gold to make money. You're buying gold as an insurance policy. The same way that you would insure your car. You would take out an insurance policy so that you have something to fall back on.
So this is actually a really big point, as you mentioned, it's an insurance policy against inflation.
Yeah.
We haven't seen, there was a lot of inflation that happened, that's happening now, and a lot of money that was printed since 2020 with the pandemic. We haven't seen a reflection of that in gold yet. This is something that I was talking to MDX Crypto about. A lot of you guys know about him. We haven't seen a reflection of that in gold yet. And to me, all I want to do is look at what gold set as an all-time high. So kind of up here around the $2,000 area. And then look at all the inflation that's happened since then and just tag that on top of gold's price. And that's going to be my target. So for me, that's looking more like $3,000. And I'm just far more aggressive anyway, because gold has been suppressed for so long. It's been suppressed for so long at this point that you've got to ask yourself, where are these sellers coming from? As soon as these sellers go, as soon as that supply of gold that wants to be sold is sold, or which is to say there's no more supply that wants to be exhausted in the market anymore, the only thing you're going to have left are buyers, and you're going to have buyers with very, very weak currencies. So, one of the things that I can see happening to gold is that it shoots up and doesn't necessarily give you more purchasing power. It just catches up to all the losses that the dollar has experienced throughout this time. Because I think one thing that people lose perspective of right now when we look at the dollar index is that yes, the dollar is getting a lot stronger than other currencies around the world, but the dollar itself is getting weaker. It's losing purchasing power. So that's just another way of saying that all other currencies in the world are losing a lot of purchasing power, and the dollar is still losing purchasing power, but a little bit slower. And again, that kind of reflection, I think, is only going to be a matter of time until we see it in gold. What I see you're drawing some percentages on gold. What's
I'm just looking now. So back in 2007, when we had the Great Recession, which was the worst financial crisis since they said the Great Depression, 1929, gold pumped from $600 right the way up in 2011 to $1,900. So what we're looking at here is a huge percentage increase. So if what's happening now is going to be worse than the recession in 2007, we could be looking at 200% increase in gold. So what you're saying is actually correct. We could be looking. So I'm not used to using this computer. We could be looking at 100, 200% increase, and very easily we could be seeing upwards of 3,000. But my targets were very, very conservative, very, very conservative. So what would that take us to, Sam? If we pump we pump a similar amounts that we did back in 2007 now,
would we draw this from the low that we've set?
Yeah.
Is that okay? So I mean, a 100% pump from here would be 3,200, and a 200% pump from here would be 5,000. I think both of these price levels are pretty.
I've even heard people come out with $10,000 per ounce for gold.
100%. It's reasonable. When you look at all the inflation, that's all you need, guys. I think this is really important to keep in mind. And the same this applies to Bitcoin even more. All you need is a little bit of almost, let's call it a logical reason for the asset to rise up. So in this case, it would be inflation. Once it starts to come through and the asset starts to rise, guess what's going to come in next? Speculation. Once you've got that speculation, it's off. The rocket's taken off. Yeah. I mean, people are going to be piling in. The effects of a weakened dollar are going to be much more obvious. Have I been shadow banned or disappeared through the bear market? No, mate, it's just the content delivery system. We've had comments from people in this live stream saying that they've just been notified, and we've been live for like 25 minutes. So this is just YouTube's content delivery system, guys. Every time you hit up the likes, it does help. We've already pumped up the view numbers by 20-30%. So guys, do me a favor and just pump those up again if you don't mind doing so. If you don't want to, of course, that's totally fine. But like I was saying, it's the speculation that comes in second, which I think is really, really big, that can take these markets higher. Because yes, obviously, I think, we could get up to 2,500 just with some of these core reasons that are going on in the world. But as soon as we get there, there's going to be a lot of FOMO. There's going to be a lot of people that money has kind of been sitting on the side for a while now.
Yeah.
Money has been pulled out of speculative markets. Where is that going to go? It only goes into assets like gold in times of stress. Of course, that hasn't happened yet. And, this begs the question of, well, have times changed and we're not going to be seeing gold used as a safe haven anymore? Or is this just the market being very unreasonable and eventually it comes around again? And it almost always is the latter explanation. It's almost always the case. That's not to say that that's not to say that this is going to be different, but generally we just see that the markets are unreasonable for a very long amount of time, and then bam, something sets it off and they go absolutely off to the races. And it's always going to happen right when you stop believing in it.
Well, that's it, Sammy. Gold is a very boring asset class for many people. And a lot of people in the crypto space, they hate on gold. They hate on Peter Schiff, but they just don't understand gold. They don't understand diversification. And when gold does finally decide to take off, right? And I don't like speaking about gold, like taking off, because it's not why I buy gold. You guys are going to regret not buying gold. And that's not investment advice at all. Not financial advice. I'm just saying that if I wasn't buying gold, I know myself that I would regret not buying gold. And I've been buying gold since 2007, so I'm already, you could say, in profit. I've certainly not made any losses, but just allocating that small amount to these physical assets every week, to your gold, your silver, your Bitcoin, or any other cryptos that you want to invest in. And then, of course, it all depends on your time horizon, your risk appetite. But in terms of diversification, Sammy, what would you see as a diversified portfolio? Like, what for you? What does diversification mean for you?
It's quite similar to you, mate. I think it depends on your bankroll size, though. Like a lot of people just can't get things like farmland.
Yeah.
Anyone can buy a bit of gold. Anyone can buy Bitcoin. Anyone can get into a little bit of stocks and stuff like that. But it's extremely unaffordable for many to to buy a house, let alone farmland or anything like that. If it's possible, 100%, I think it's the most logical thing to do, especially if you're worried about where the economy is going. You want to go right down to the basics. You want to get your farmland. You want to it's self-sustainable. It is the right decision in my opinion as well. If you can afford it. But mate, to be honest with you, I've been all in on Bitcoin for many years. I stopped being all in on Bitcoin right around Bitcoin's peak. The first time Bitcoin peaked around over here is where I sold a bunch of Bitcoin right up here to buy my house out here in Dubai. Many of you guys know about that. So this is where I stopped being all in on Bitcoin. But that's the only real diversification I've ever done. I don't hold many dollars. I don't hold many pounds. Really just functional amounts that I can live. And I'm still majority in Bitcoin even throughout this whole crash. And I have absolutely no problem with that because I believe in this asset class. I'm not actually in gold. I think that I want to get in gold. I haven't pulled the trigger on it yet. The price keeps dipping lower, and it looks like it might keep dipping lower still. And so I'd like to see a really nice entry point and then get in on gold because I think this is a very obvious play.
Speaking about Bitcoin as well, belief in Bitcoin, what people don't understand is that Bitcoin is literally programmed to go up in value, and that's it. And I can't see people stopping believing in Bitcoin anytime soon.
Well, yeah, it's a bet against governments, right? And governments keep fucking up. So,
exactly,
yeah.
And especially over the last couple of years, how we've seen all of these orchestrated events and manipulation and all of the bad stuff that's happened to the people, and the loss of trust in paper money. Bitcoin is the answer at the end of the day. And if Bitcoin does get down to 13.9k, I'll probably sell my right leg.
Just to buy more.
Just to buy more. And if Bitcoin gets down to 10k, I'll probably sell the left. But I personally don't understand people who don't buy Bitcoin. I don't like crypto. For me is my religion. I believe in crypto because that for me is freedom, especially when you can hold that Bitcoin on a ledger. You can hold it in your hand. I think the most important takeaway just now, guys, is that you need to learn how to become your own central bank and decentralize your wealth.
Oh yeah.
That is the most important thing that you can take away from this right now, because decentralizing your wealth and your freedom, taking control of that into your own hands, has never been it's never meant more now than what it's ever done before. And what we've got here is history repeating itself, but now on steroids.
What do you mean by that? History repeating itself now on steroids? Is this in reference to 1929?
Well, you've got the 80-year cycles. You've got the Shemitah cycle as well.
Let's talk about that. I'm not familiar with this. What's the 80-year cycle?
Every 80 years, the financial system goes through this particular cycle with the market crashes.
Okay.
Like, for example, the Shemitah. The Shemitah cycle is every 7 years. So the end of the Shemitah was about 1 week ago. That was Monday last week. At the end of the Shemitah, it's followed by financial hardship. So between 1 year after the Shemitah, that's where you, historically in the markets, you've seen all of the financial crashes. I don't know how it happens, but at the end of the Shemitah, it seems to spook the markets. So do you follow the Shemitah at all?
No, I've never heard of this.
You've never heard of it? Okay. So it's Jewish, and what's very strange is that aren't the world bankers, are they not Jewish?
I don't know, mate.
Like the Rothschilds. You've got the Rothschilds
right.
square and street in Israel, for example. So, I believe that I thought that some of the world bankers are Jewish and they follow this Jewish calendar, and they've got this cycle called the Shemitah, and the 7-year cycle, and every 7 years, without fail, the markets crash within 1 year of the last day of the Shemitah.
That's a curious take there. Where do we see, when you say markets, are we talking indices? Are we talking currencies?
Yeah, like the stock markets.
Okay, can we look at the SPX then, just to see if I can identify this? Because I'm curious about this. I've never heard of this before. Let's take a look at it right here on the monthly time frame. So
go 7 years back.
Okay, 7 years back from today.
From now, yeah.
Well, that's 2015, so that's going to put us right around here. Okay, yeah. Yeah, we could call this, if we're being generous. I mean, I don't like calling this a crash, but obviously for the S&P 500 standards,
it spooked the markets.
Yeah, this is definitely something.
15%.
Yeah, I mean, generally our pullbacks are much smaller than that.
So go back again another 7 years.
So that puts us at 2008, 2007.
There we are.
Yep.
57% crash.
Yeah. This was a crash. This was serious.
Yeah. Back again.
7 years prior. Okay.
There we are.
All right. All right, mate. Okay.
Yeah.
And does it continue if we go 7 years further? That's 93. Do we have anything in 93? Not quite. Maybe skip. This is
certainly over the last 20 years.
Yeah.
But,
Okay, so
yeah,
we're in
I'm
it
not
right now.
not religious, but it does have some significance in the markets.
Okay.
It does have significance in the markets.
Yeah. Some people are asking how this is spelled. Can you just correct me? Is this correct?
SHMITA.
SHMITA. Yeah, that's right. Yeah. So if you guys want to Google this, go ahead and check it out. That's the 7 years. Well, that means we're done now. Doesn't that mean we're good? Or we might not be done.
We're not. We've just started.
Right. Okay.
So the last day of the Shemitah was Monday last week. I think it was the 26th. Don't quote me, guys. 26th of last month. So from the 26th of last month until the 26th next year of September, that is the time that we should be seeing the financial hardship. We should be seeing the market shaking, collapsing, and a lot of bad stuff happening. And it's pretty safe to say that after everything that's happened, why wouldn't the markets collapse? Why wouldn't the markets crash?
I think they've already collapsed.
Well, they have collapsed, but they've only just started collapsing. Take a look here.
Let me just bring up the chart. Sorry. So, by the way, what the viewers see is on the screen.
Okay.
Yeah, just so you know. But yeah, go on.
Yes. So we can see here that the markets have just started crashing. So the question is, how far are we going to crash? Is this going to be the biggest crash in history? Are we going to crash? Let me go back. If we compare it to this one here, okay. So if we're going to do a 58% crash, that would take us to that support line right here.
It lines up. That is the previous 7-year cycle that you described as well.
This is what I believe is going to happen. And when this happens, you're going to see mass unemployment, the banks are going to foreclose, there's going to be anarchy, gold is going to crash, silver is going to crash, Bitcoin is going to crash, and by how much? Real estate is going to crash at least 30%. But that is that's why you want to be sitting in US dollars right now.
Okay.
I hate saying that, but
that's fine.
I hate the words cash is king because I hear it so many times. I'm like, guys, cash is not king. Cash flow is king. And now I sound like Grant Cardone. But he's right in what he's saying because the more cash flow that you have, the more liquidity that you have to invest in these crashes when they come. So for me, I create my cash flow through buying businesses. I call it a leveraged buyout. I buy businesses with no money down. And you guys might be thinking, how is that even possible? Well, that's been happening for many, many years. You guys should go away and read a book. And it's called The Barbarians at the Gate. Based on a true story. I'm not going to give you any information on it. Go away, read the book, and it's going to teach you about exactly what I do for a living. So since I was your age, I started buying businesses with no money down because I wanted to have cash flow so that I can invest in these market collapses. So I literally started in one of the worst times in history since the 1929 Great Depression.
So you started in 07, 08?
I started, dude, during the 2007. And
Okay.
that was, it was a little bit stressful, but I was very new to the markets. Then, and I knew that by looking at the markets and stressing myself out, it wasn't going to help my situation. I literally had to find a way to get access to immediate revenue and cash flow. And to do that, the only way was to learn how to buy revenue and learn how to buy your customers, not create revenue. I looked at starting a business, right? And it said, wow, 90% chance of failure? Anything with a 90% chance of failure to me is a scam. So why would I want to do something that's got a 90% chance of failure? So I thought, well, I'm just going to buy a business. Going to buy a simple business. I'll see how it goes. I'll learn from the inside out. I'll get revenue from day one. That's going to give me money to invest in gold, silver. Wasn't investing in the markets and crypto markets back then, but I was buying stocks and shares and all the other bits and pieces. Real estate as well. And I just started, wow, bought a business, no money down. Commercial cleaning company. I started stacking these businesses, got an exit at the age of 25, semi-retired, fulfilled my dream of living in the beaches of Spain, big villa, driving the Ferrari. You managed to achieve the Ferrari before I did, so kudos to that, man. That's not many 21-year-olds ripping about Dubai and living in the Burj Khalifa. 19, that's
I was
insane.
19.
That's madness.
Yeah.
I was a little bit later on in life, but that's crazy.
Guys, I just want to jump in. All of Ken Mack's links are in the description and in the title. So if you want to go on Ken Mack's YouTube channel, it's in the title. Go ahead and click on it there. His Instagram, Facebook, TikTok, Twitter, all in the description. Go ahead and check it out if you want to learn more about what he's doing and how he got to where he is. But yeah, sorry, carry on. The dream in Spain.
The dream in Spain. I was a peasant when I was younger. We own a farm. And I say the peasants of today are going to become the wealthy of tomorrow. And I'll tell you guys why very soon, so stay tuned. This is very, very interesting information. Very interesting. But I came from a poor family, so came from no money at all. So I had to learn how to make money myself. I had no qualifications. I was not a chance I was going to college or university, because that's a scam. Like, the system is literally a scam. It's designed to desensitize and defraud you.
Absolutely.
Yeah, it's a scam.
Yeah.
So, bought a business, 6 figures of income from day one. I managed to stack a few of these businesses together, leverage buyouts, very simple structures. All of the businesses included an element of seller finance, where the seller literally became the bank. Then they used the assets of the company to buy it, to raise capital. So if it had real estate, 70% of the asset value, I'd get liquidity into the company, that goes to the seller, and then the balance with seller finance. Like, there's so many different ways to skin the cat. 100 different ways to skin the cat. I'm not going to bore you guys with the plumbing and technicalities of how to do it in an LBO. But I started doing this at an early age. Got an exit at 25. I thought, wow, okay, I made enough money now to retire for the rest of my life. But what I need is not the money, okay? I need cash flow. Because now this money was a big pot of money, I need to do something with it. So I took that money and I started investing it into real estate, using various different strategies that brought me passive income. So I thought, well, why would I want a pension pot? I know that we've moved away from the charts here guys, and we're talking about the crash, but I'm trying to give you some insights.
That's totally cool.
I'm trying to give you guys some insights, what I was doing back in 2007, because this is very similar. We were in the time of the Shemitah. We're in the time of the Shemitah, guys. So I want to help stimulate your minds so that you can come up with some ideas of how you can also be in a position where you can get access to massive cash flow. And by the way, guys, anybody can do it. Anybody at all can do it. So I took that money, my business exit funds, and I just started buying real estate. Short-term lets, long-term lets, houses of multiple occupation. So all of these different strategies were bringing me in a lot of money. So I thought, wow, okay, so pension's a scam. Like, why would I have a pension if you guys can go ahead, buy a flat, monetize a flat, pay off the mortgage in 10 or 15 years, and then sell that flat or apartment or house, whatever it is you want to buy, and there's your pension fund.
It's far superior.
The only way that you can be successful and have a life of freedom and exit the matrix, because it's a matrix, isn't it, is if you completely decentralize your wealth, diversify, and become your own central bank. So that was 25. Retired to the beaches of Spain and Marbella. I was living a good life, and I thought, wow, I've done fuck all for 3 months. Life's getting a little bit boring now. There's only so much sitting at a beach that you can do. I had this dream, by the way, of living near the beach and being able to bring the laptop and operate my businesses from the beach and by the swimming pool. But what they don't tell you is you can't see your laptop screen in the sun, because it literally dims to the point where you can't see anything. So I nipped that in the bud pretty quickly. I thought, well, okay, I'm an entrepreneur, I'm a creative person, and I got my biggest buzz from being creative. Like, once I was able to choose my own stress. I've made some money, cool, got some assets, but now I can choose to be here in the office 10 hours a day. I can choose my stress. I can choose to be in these meetings. That's when I really started to enjoy business and going on these crazy adventures. Buy businesses in Paraguay, Argentina, Brazil, Spain, and that's when my life really took off. And maybe there's a lesson that you guys can take away from that, because it's stressful, when you're trying to be somebody or build, get yourself to that level, getting that degree and getting that killer job that's giving you that 6-figure salary. Like, there's a degree of stress, isn't there? Because you've got that pressure. I'm going to be 21 soon. I'm going to be 25. I'm going to be 30. I need to reach this milestone before I'm 30. Like, we put pressure on ourselves. But that's I was speaking about this with the other day at dinner. We're advancing men. And another book, guys, Wallace D. Wattles. Okay.
This is on my list too.
It's a great book. Wallace D. Wattles. He authored a book called The Science of Getting Rich, and it talks about how the wealthy build wealth. They do things in a certain way. So I highly recommend that you guys go away, you download the audiobook. If you've got no money, no excuses, you get YouTube. You get it for free. All of these books, by the way, are for free on YouTube. So go away and listen to the book.
You can find the audiobook version quite easily.
And it's 200 pages as well, so it's actually quite a nice book to read. So I highly recommend that you guys go away and read this book. And as an advancing man or woman, it's your, like, especially as a man, okay? It's our duty, obligation, and responsibility, especially in a time like now, to do something about this opportunity that we have. This is literally the greatest time in history to build wealth. What Warren Buffett says, when there's blood in the streets, you want to buy the blood.
So actually, I also want to just draw us back to this right now. By the way, Ken, I mean, look at the comments. People are loving you right here. This is really, really cool. Guys, if you are enjoying this, do me a favor and just smash up those likes real quick. We are going to be looking to wrap this up at some point in the next little bit, so definitely start dropping your questions in here as well if you have something for Ken as well. But Ken, what I'm curious about, just on the note of that Warren Buffett comment that you just highlighted, is what is the, like, do you see a silver lining here? Is there any reason for you to be optimistic? Is there any perspective that you have where you feel like we might actually be okay? I'm just curious, because at a time like this, and I always say it this way, everyone and their grandmother is very bearish right now in this market. I love to look at the sentiment indexes. Look at the comments right here. These guys are
beautiful.
Loving
we
you.
love you guys.
Look at this. We look at the sentiment in the space right now. I mean, we're at extreme fear for Bitcoin. Do you use this?
Yeah, of course.
This is
the
great.
FG index, amazing.
It's really, really good. Again, we're flatlining.
Clicking max.
Yeah.
Where are we now? Okay, so we can further to drop.
Yeah, I mean, we went fairly low. This is about the lowest reading we ever got
18th
right
of June,
here.
okay.
Yeah, the only
I think it's time to come back down.
We could do. I think the market is a little bit more resilient now. It's almost like the market has developed some calluses to dropping down. What I'm curious about is what is your optimistic scenario for Bitcoin, for the S&P 500, for the dollar? And once you've told me about that, I also want to speak to you about real estate before we get off this, because we've seen indices drop, we've seen cryptocurrencies drop, we've seen currencies drop. We haven't seen watches drop much. We haven't seen real estate drop at all from what I've seen. What's your take there? But first, let's start off with the silver lining, with the optimistic take, just to balance this out, because this has been extreme doom and gloom. You guys watching me on this YouTube channel know very well that, yeah, I do highlight these same ideas, but I don't like to be as doom and gloom. Maybe that's just me being foolish, but I just don't see as much disaster around the corner. But I'm also not super qualified to talk about that, and I always give you guys that mention as well. But yeah, what are you curious to know what your take is, your optimistic side?
You asked the golden question, are we going to be okay? Is there a chance that we might be okay? Well, the educated people are going to be okay. I'm going to be okay because I know exactly how I'm going to play the markets from the crash. I know exactly what I'm going to be buying, what I'm going to be investing in, and how I'm going to play things. But for those of you guys that don't have that level of education, then you're not going to be okay. No. And I'm 100% certain on that. Well, let's just say 99.9%. Let's say the gods come down and by some magical way that everything's going to be okay and everything sorts itself out, okay? So I'm 99.9% sure that we are going to have a monstrous crash. I have been preparing it for a very long time. I think that you guys should be starting by certainly educating yourself. This should be a subject that you squirm away from. This should excite you. This should be an event that's put it this way, right? What are you going to tell your grandkids, your children, what you did during the greatest financial crash in human history when it comes. Are you going to tell your kids that you were sitting on the sidelines, that you didn't do anything about it? Because I believe that the middle class are going to be completely eliminated. And I believe this was the plan.
They are being eliminated.
They are being eliminated.
It's happening right now.
But the good news is that I'm just a normal guy. Okay, I want to make that clear. I've just been in the game a long time. So I've got a level of education now and confidence. But normal, everyday people, and I'm sure there's many normal, everyday people watching the stream. I told you guys I was a peasant. I still own a farm, so you can say I'm a peasant, okay? A posh peasant.
A peasant with a Ferrari, a GT3 RS. I like it.
A couple of million dirhams worth of watches. But yeah, I'm a posh peasant. But you guys can very easily go away, learn a new skill set, and you can also become very, very wealthy. And you were speaking about real estate. Like, you can invest in real estate with no money down. And there's a very big misconception, guys. And I hate it when people say this to me, but it takes money to make money. It doesn't take money to make money. It takes knowledge to make money. You could strip a man, a knowledgeable man, of his assets, and I guarantee you that he's going to bounce back to that position and higher in a very short space of time.
There's an interesting like wealth distribution thing. You probably heard of it, where if we equalized all the wealth in the world, like everybody had the exact, like all the money in the world is spread out equally across absolutely everyone, we would have a similar distribution of wealth again within. Have you heard of this? Within like 3 years or something?
Of course, you have 100 people in the room and they all win the lottery. 2 or 3% of these people are going to be able to retain these funds. The rest are going to squander all of the money and be back to square one.
They'll give it to that 2 or 3%.
They'll give it to that 2 or 3%.
It'll just happen, yeah.
You know, what does, or how did the rich work? The rich work, I'm just trying to think what Robert Kiyosaki says. A rich person's assets are a poor person's liabilities. That's what Robert Kiyosaki says, and he's so very correct with that statement. A rich person's assets is a poor person's liabilities.
Yeah, you let that sink in, and it just the more ways you check that statement, the more ways it rings as true.
So should we speak about real estate?
Let's jump to that. First of all, before we get there, are there any charts you want me to show, or should we stay on this face cam? Or some data that you think is useful to show on this?
This is good data.
Okay.
This is good data.
Let's go with this. Well, so I've noticed, I bought a house. I'm genuinely curious about this. I bought a house out here.
In Dubai.
Yes, in Dubai. I'm not going to say where, but I did buy one, and it was, to me, a significant amount of money. I'm kind of sitting at like
21-year-olds. 21-year-old. Yeah, congratulations, my man. Congratulations. Not many 21-year-olds out there have been able to buy a house.
Yeah. It's a hell of an achievement. It's something my mom was dreaming of for a while. So the house is for my mom. You guys know I live out here in the Burj Khalifa. Yeah. We haven't seen a crash yet for this, and generally that's
which is very, very strange, isn't it? But what we have seen is the mortgage application's been pulled in the UK, for example. Yeah. But in a lot of places in Europe, we are seeing signs of the real estate market crashing, and certainly sales in the UK. I've got some stuff, like, I'm going to say something, but it goes against what I'm going to say. One of my number one rules are to never ever sell your assets. So that's one of my rules. But there are some assets that I am disposing of, some very large assets in the UK, but I've got my reasons, private reasons for getting rid of them. But I think when it comes to disposing of assets, you need to ask the question, first of all, is it cash flowing? Can I withstand this asset losing 30% of its equity?
So 30% is the maximum that you would expect?
This is the maximum, but you got to remember this, right? If you're buying the asset and you go by my number one rule, which is never ever sell your assets, then why would it bother you if that asset's cash flowing if it pulls back 30% in value? Like, I've been holding assets in Spain that I bought into negative equity from day one because the banks paid me to buy the houses. They give me 113% mortgage. So let that sink in, guys. The banks in Spain were giving 113% mortgages. They were literally paying you to buy a house. Still got one of these houses.
Reminds me of when oil traded in negatives. It was just
mental. And my
to see
interest
it.
rate was like 1% on the Euribor. Was it like 0.5% to start with?
Something to dream of now.
It's unbelievable. And now the rate's gone up to like 1.5%, I think.
1.5.
Let me just
Must
double
be
check
much
that.
higher now, no? We've got some interesting comments here. I analysed this. By the way, you thought I wanted to laugh earlier. I was just really happy hearing Ken Mack talk about it. I wasn't about to laugh. Mortgage rates are high in the US. Yes, they are. And actually, one of the things that Ken mentioned is, mortgages are potentially being pulled out in the UK right now. That's just a function of the interest rates being increased, and so that's going to be affecting mortgage rates. I don't necessarily think that they're going to stay unavailable, but they're going to become far more unaffordable potentially.
There you are. That's my bank account in Spain.
Okay,
Interest rate
1.26.
plus 1.26%. So that was less than 1% for many, many years. Opened it in 2015, this one.
That's is that fixed then, that rate?
To be honest, I've got no idea. I got the house for free. They pay me to buy the house, so I'm happy with that.
Fair enough.
But yeah, so here's a vision, guys. Right, you're buying a house, I don't want you going away thinking, I can't buy my house to live in. If you're going to be living in that house and you've got a long-term vision, and your plan is not to sell the house, then you've got nothing to worry about. That house will eventually come back. That's the facts. It will eventually come back. So I think buying for the long term, creating a legacy, and passing these assets down to your kids in the future, that's a mindset. Locking these assets into a trust, into like an irrevocable asset protection gift trust. Like, here's one of the rules of the wealthy, and this is one of the rules that I've been playing by for a very, very long time. The rich own nothing but control everything. And how do they do that? They lock everything into irrevocable asset protection gift trusts. So that's effectively saying goodbye to my assets. They go into a trust, so it's a special purpose vehicle, and you get your trustees on top, and you're sitting behind as a beneficiary. So you've effectively given up ownership of these assets, but they're owned inside the trust. So you're protected from bankruptcy and all sorts of different crazy things. And then you've created a legacy, which you can then pass these assets in the trust to your kids.
What do you? That's also to help with inheritance tax and stuff like that, right?
Yeah, it's a tax efficient way
Okay.
to structure your estate. But this is what the wealthy do globally. They lock all of their assets into trusts. They run all of their businesses through corporations, special purpose vehicles. If you're buying land, you're buying a real estate. Let's say here in Dubai, you would lock it into a company. If you're buying it in the UK, limited company then buys the land or buys the house. Is the best way to do it.
What do you think about prices? What do you think about the speculation on the property markets, real estate in general, land?
What I don't like, dude, is when you've got the houses and it says offers over, and people are paying like 10%, 20% offers over the valuation of the actual building.
Yep.
I think this is very stupid.
It's happening with cars. Like, where's the money coming from? It's so confusing to me.
It's crazy, dude. And even with watches, but that's to do with scarcity. It's to do with scarcity. Sometimes again with the cars, to do with scarcity, and that's what pushes these assets up in value. But again, if you think about a house, there is only usually one or two penthouses in a building, so you get scarcity. So you could be, there are certain situations in certain real estates that you can buy where you would pay over what it's actually worth, because in the future you're speculating on that value reaching that point.
Right.
But like, I personally would not be buying any buying any property over valuation right now, because I know exactly what's coming.
Yeah. So this speculation. Do you think it's, for lack of a better word, can we call it dumb money? That's buying over.
It's stupid money.
Okay.
Yeah,
Okay.
It's stupid money. It's uneducated money.
Okay.
Like, the system, literally, they prey on people being stupid. They prey on people being financially illiterate. They will not teach you in school about money, about how money works, what it is. The financial system, how to make money, like passive income. They just teach you how to be a good employee. They teach you how to be just a cog in the giant machine in the matrix.
Mate, when I saw this, I dropped out of high school. This, and it was for the same reason. It's just not useful to stay in the system.
It's a circus, dude.
Mm-hmm.
It's a circus.
Yeah.
And they're putting like. I had the red flag moment in school when they were pushing these UCAS. I think it's called UCAS.
Yes.
UCAS forms, and we saying, okay, now you're gonna choose what you want to be in life, what direction you want to go in, what course you want to study next in university. Like, what, like, is that my only choice now in life? But if you don't do this, you go out to the big bad world. I said, so did all of these guys driving Ferraris and Lamborghinis, did they like go to these college courses?
Yeah. I mean, maybe if they got them at like age 60, 70, right?
Yeah.
You know, but yeah, you're not making fast money staying in the system. That's for sure.
No, dude, not at all. And like, life is so short, man. Like when you take a look at your lifespan, you've got between now and between say 18 and 60-year-old. By the time you get to 60, like your life, your testosterone is down, your energy is down.
Yeah.
Like you're getting, you're still, I don't want to say young, you're a little bit old when you get to 60, and like life is just not as good. Like what you guys want to be doing is you want to be getting your passive income right, getting your assets right, learning how to buy businesses with no money down, learning how to buy real estate and monetize real estate with no money down, and then taking all of that income and investing it. So I call that unearned income, where you haven't had to trade any time for money, and then putting that income into like Bitcoin, gold, silver, and all of these other asset classes. And where you guys should be is partying your ass off in Ibiza, in Magaluf, enjoying your fucking life, living your best life, traveling the world, getting a backpack on, having your side hustles, just learning how to play the game, and do that right the way through your 20s. Just have a good life. When you hit 30, take things a little bit more serious, get some more income streams, get some more asset classes.
What do you say? Most viewers on this channel are between 30 and 50 years old. What's your advice to them?
It's never too late to start. It literally takes 3 months. Like the quickest way to build wealth is to learn how to buy a business with no money down. And effectively what you're doing is you're buying somebody else's pain. Okay? I'm sorry guys, I got the demographic wrong there. But you're buying somebody else's pain. So it can take somebody, let's take it for example, I bought like 10 companies this year in the UK with my students, okay? So collectively these companies are like 200 plus years worth of pain. It's taken us 6 or 7 months to buy all of these companies. So you can buy one company that's 40, 50 years of age, which has taken you 3 to 4 months out of your year to buy that company, and now you get access to a 7-figure company. We bought a manufacturing company in London, and that manufacturing company was incorporated back in the 1980s or 1990s. That one took us, by the way, 10 months to buy, but that was a no money down transaction. So like, it doesn't matter what age you are. Like, starting a business, by the way, at 40 or 50 years of age, like, that's very, very high risk. That's very high risk. There are very few businesses that you can start that don't require any of your capital input, that you can monetize and make money, like a lot of money from day one. Like, you ain't going to be successful working in Tesco's or working in a 9-to-5 job, even.
I think it depends on what kind of business, because I think it's actually it could be pretty easy to make money fairly quickly. I mean, this is completely out of bounds.
You mean
for
starting a
this YouTube
business?
Channel. Yeah, to start a business.
Exactly. There are businesses, but it depends what business. It depends what business.
Yeah. I wouldn't actually put it down to any sort of age restriction. I think it's
no.
But
age is like, let us know, guys, in the comment section. What age are you, and whereabouts are you from? What's your location, and what age are you at?
I want to draw your attention to this question here. Sammy Ken, what do you think about cash flowing properties in the US? This doesn't just apply to the US though. Any Western country or anyone that offers government subsidized housing, such as low income housing, elderly housing, or government backed properties.
Anything that's government backed is good, like social housing. So like we call it DSS in the UK. Yes, the government don't pay a lot of money, but these properties can be accessed for not a lot of money down. So these are kind of subprime properties. But yeah, absolutely.
If you can get it, it's worth it,
if you can
right?
get it, yeah, they're great. But you call it like the multi-family units in the USA are fantastic. In the UK, for example, we call it house of multiple occupations. So you could take one property, right? That's got let's say it's a 4-bedroom house, and it's got a lounge or living room, whatever you want to call it. So you could take away that living room, you could make that into a bedroom. This is what I was doing, by the way, in the UK. And now you've got a 5-bedroom house. Instead of renting that house out for one amount of money, you get 5 leases. So you've got each unit you rent out for say $1,000 every month. So now instead of getting 2 or 3K a month for that house, now you're getting 5K a month for that house. And you can do that without having to buy these properties. You can be making an arrangement with a landlord to manage the property with a fixed guaranteed rental return to the landlord on a management lease. And then you could be taking that property on over, say, 5 years with an option to buy. And you could be running all of that revenues through an SPV, through a company. And then after, say, 6 or 10 months, you could then take the revenues that you've made from that property and use that to fund a deposit for that house. So you've not had to use any of your own money. And now you've had that property pay for itself. So an option to buy that property within, say, 2 years or 3 years, however long the leases for that property. But I've done that many times in the UK.
So it being government backed is basically a catalyst. It's a shortcut to getting where you want to be. Anyway.
Not necessarily.
No.
No, I'm just saying that government backed, is in they're paying the rent income or given a percentage of the rental income is good, but you're dealing with a different type of clientele there. Much higher risk.
Sure.
But if you're buying it, like you guys in the UK, let me give you a little tip here. So if you go on bizbuysell.com, okay, let's move over to businesses. You go to bizbuysell.com, there is probably about 2 million plus businesses for sale. Set up an account free of charge. You can filter all of the results by seller finance. So there are hundreds of thousands of businesses for sale in the USA where you can buy with just seller finance. Now, in the USA, write this down, guys, you got access to a program, government-backed program, since we're talking about government. It's called the SBA 7A. So write that down, SBA 7A. So the government have literally given you guys the keys to do a leverage buyout where you could buy a company up to the value of $5 million without having to put down much money at all. So you can get an SBA loan with a 10% deposit. If you want to buy that business with no money down, you can draft in a partner which can fund the deposit, and then you can be the operative partner of that business, running the show. You could have a silent investor, fronting 50% of the company, fronting, the deposit of the business. And the government have pretty much bought you a business up to the value of $5 million, which is absolutely crazy.
What kind of deposit would you have to put down for that?
10%.
So $500K on
500K. So let's say you buy a business at $1 million. You're talking 50K.
That's one semester of university, right? I don't know how much it costs in the US, but
you're talking like six figures for if you go to Harvard University, you go to any university, you're talking like hundreds, $200,000.
Sounds like an obvious
And the
choice.
thing is, they'll chuck that money at you. They'll say, yes, we'll give you these student loans like they do in the UK, but the moment that you want to start a business, it's a problem.
Yeah.
But the moment that you want to take out a loan to buy a car or fancy electronic equipment and take a holiday, home improvements, they'll give you that money, guys. No problem at all. What they want to do is make sure that you're fully indebted so that you're absolutely sucked into the matrix. But the good news is, for those of you guys who have a bad credit history or a bad FICO score, you do not need to have a good credit score to be successful. And one of the things that they've constantly drilled into us at a young age is if you mess up your credit score, then you're absolutely fucked. Yeah? But that's not true. Like, I couldn't even tell you guys what my credit score is. It's not something that I care about. Like, I messed up my credit history back in the UK before, when I was younger. I thought, wait a second, there's 195 countries in the world. So, like, I'm almost bankrupt in the UK, fine, whatever. Okay, so I'm going to go to another country now, go to Spain, check it out, and I can get access to the Spanish credit system. I could buy businesses there. And before I knew it, the American Express, credit cards, bank account with an overdraft, mortgage I just showed you now. So like there are many countries that out there in the world that you can, if a credit score means something to you, you can get credit in other countries. But I just want to give you guys peace of mind that perhaps might not have a polished FICO score or credit score if you're in the UK. This is nothing to worry about, guys. Take it from somebody who does this for a living.
Rocky is asking, are there similar schemes in the UK?
There are not any schemes similar to the SBA 7A in the UK, but you can buy a business in the UK without, there's so many different ways. Let's say you're to buy a manufacturing company that's asset heavy. You could go, I'm going to just pull a few things out of thin air. You could go to Close Brothers Asset Finance, get all of the assets in the business appraised, and they will give you up to 70% of the asset value. So if the assets are worth, say, $1 million, let's say the valuation is $1 million, then you can access 700,000 of that asset value. Same for the real estate. You can finance the debtor book, so the invoices. You understand debtor book?
No.
Okay, it's called invoice financing or invoice factoring or invoice discounting. It's got many different names. But okay, let me try and simplify this. A business to business produces invoices. Okay, that business, let's say, if it has £100,000 worth of invoices, you can go to an invoice financing company, sell the invoices to an invoice financing company, and release 95%, so 95k of the monthly invoices. So again, you can use that towards the down payment. You can bring in an investor, and these businesses, we're buying them, dude, on a 1x.
So let me just repeat that, see if I understood you. So you're saying that you could look at the invoices that a company has, so basically payments that are due to be paid but haven't been paid yet, and
Correct.
you can use that to subsidize the loan?
You can get access to that capital before it comes in. So the invoice financing
from a
company,
lender?
Yeah.
Okay.
So they call in all of the capital, but they give you the money up front, less 5%.
So they just have to trust that these invoices end up getting paid?
Yes.
All right.
But it's a facility that we use every day. It's an amazing facility. A lot of businesses use it for day-to-day business. Bibby Financial Services, Aldemore, RBS invoice financing, Santander invoice financing, very popular. You can buy a business right now on a 1x, 1 times multiple of the free cash flow. Let's say you want to buy a commercial cleaning company. You can buy that for 12 months worth of the profit, the free cash flow. You can bring an investor in and resell the equity on a 5x. He's now a silent investor, enjoys the dividends, and that means that you only need to give away 15% of the company instead of 50% of the company. There are so many different ways, but once you get it, then you get it, and you'll never ever look back. But this is, like, for me, that's my number one way to get access to money to invest into the crypto markets. And that's how I was able to invest so much money over the years into Bitcoin.
And this brings us back to like dollar cost averaging and just kind of putting your money in the markets when it's dropping and so on. Is that
absolutely, man? Like going all into anything is a big mistake, but it's a great way to dollar cost average. But even when I'm buying businesses, I'm still dollar cost averaging every month a little bit of money into Bitcoin. Or I was buying Bitcoin on a daily basis. We were down at 18 and a half. But just dollar cost averaging, so you're buying the range. But like I say, I'll be buying anywhere between 14k and 25k. Like,
pretty decent.
Like, Bitcoin is at a massive discount. But when I was doing my charting, let's speak about the market top. Let's say that Bitcoin has bottomed out. Okay.
Right.
If Bitcoin has bottomed out, I would say that our top for Bitcoin in the next cycle in 2025, obviously after the March 2024 halving, I'm looking at an $89,000 top in Bitcoin. If we pull back to the $10,000 to $14,000 range, then I am predicting a $59,000 Bitcoin, and I'm also factoring the amount of money that's been printed in all of these crazy events that have taken place in the world.
I think you're very conservative.
It's conservative, yeah. So get like a 3.5x is what I'm looking at.
Of the low?
Of the low, yeah.
Okay, I can't do this math quickly on stream, but okay, Ken's got the calculator out. Okay.
Yeah.
So let me do this on stream. So that's
17,500 times 3.5. It does take us up to 61,250.
Why 3.5?
Does Bitcoin not do a 3.5x from the previous all-time high historically? Is it 4.5x times 17,500?
The number that I usually use on this YouTube channel is that Bitcoin generally will at least, this is also conservative, it will generally at least double its previous all-time high. So for me, my next target is a minimum of $130,000 for Bitcoin in its next bull cycle.
So will you be dollar cost averaging out of the market, or are you going to be waiting for that market top to happen before you sell?
Well, good question. I accept that I'm going to get it wrong, and almost everybody will get it wrong.
Yeah, it's impossible to time the top.
Yeah. So I will. I'll take it as it comes. I don't actually speculate on questions like this. Like when you asked me if I think we'll drop below 17, or if when other people ask me kind of where the market will go in the next bull cycle, I personally don't think these questions are worth considering unless you have like a genuine, okay, like dropping below 17, okay, you'd have a genuine investment reason to, you'd have to know that if you want to position your capital in the market. But I'm already all in, so I can't buy more Bitcoin. Like I've got what I've got. And the reason that I don't like to speculate on those questions is I think we lull ourselves into a false sense of belief of kind of knowing what's going to happen. Okay, to be fair, dropping below 17, that's so close to where we are right now, right? So it's pretty plausible that we end up kind of swinging below this low and then dropping far lower.
Perhaps we just have a double bottom.
Do you know what? That's one of the videos I made recently is this kind of W-shaped pattern. Those of you who are subscribed to the YouTube channel are going to know all about this.
There we are.
We are in a double bottom right now. And what we need is to break the some sort of neckline for this. So
the longer the Bitcoin consolidates in this range, the more likely we are to have that double bottom. Because imagine how many people now are waiting with their USDT to buy 17.5k Bitcoin. I'm one of them. There is only so much Bitcoin on the exchanges as well. So
it's an interesting take. So what I was mentioning is that what I don't like is seeing how, we kind of interacted with this support level previously very quickly, right? Look at these quick bounces we had right here. We're not getting quick bounces on this occasion. So one way to read this is what you just said. Another way to read this, and it's what I'm leaning towards, unfortunately. And this is the thing, is I'm not actually bearish on any market in particular, like certainly not as much as Ken, but the facts are the facts here, and we got very quick bounces before, and now we don't, and to me that's a sign of weakness.
It's weakness, big weakness, and the more times that we test support, the weaker it's going to become.
We've tested,
literally knocking the door, waiting to break through. So
we tested 24, 25 like once. We've tested the lows 1, 2, 3, 4, 5. This counts as like 15 times, really. So we're
it's getting weak, dude. It's getting weak.
We've got the warning signs that we're going to drop. But at the same time, what I just can't look past is that everybody thinks we're going to drop, and so that's why I've been.
How is the RSI looking? The stochastic RSI on the daily.
Oh, I don't use the stochastic. I'll have to give this to you because I still, guys, believe it or not, I still don't understand the stochastic RSI.
So we're oversold on the daily chart. So we're now pointing down.
This would be overbought, no?
Sorry, overbought. Yes, overbought. So we're heading down now. It's a good momentum indicator.
I'm actually, so I've been saying this for a little while. I don't like looking at Bitcoin in times like this. For me, it's going to be more, kind of what happens with the SPX. Just because this is, it's easier to read than Bitcoin. Bitcoin is far more manipulated in terms of its price action than the S&P 500. And to me, this has a fair bit of upside to go. I'm looking at this box for a little bit of a target. And that if the S&P 500 can reach this box, that should translate to a $21,000 Bitcoin, which, if you guys have been around since the beginning of the live stream, guys, let me know in the comments how many of you have been around since the beginning of this live stream. We've been running now for about 80-90 minutes. Curious to know how many of you guys have been here since the beginning. What you're going to remember is I had this line painted at kind of 20.1 right around over here, and I was saying that if we kind of manage to rise above this, we're going to be looking at those next areas at 23 and so on. I think that's a fairly easy take, and what I'm really looking to see is, do we get some momentum just kind of bringing this thing up? Because to me, this is definitely ready for a little bit of a pump just on the short term. Because I'm seeing way too much bearish sentiment, and this is, to me, this is being confirmed by the dollar dropping right now. It doesn't need to have a deep correction that lasts a long time. Like this correction right here lasted, actually this was pretty deep. This was 30 days, and it dropped down by 4.3%. So far, we're
4.3%.
Yeah, which is quite substantial.
Well,
4% already. This is a very deep correction. But if we end up kind of seeing something with the dollar where we've dropped down now, we move up again, maybe catch a little bit of a ceiling here and drop even lower. This is the kind of thing that I think could really give the market a lot of relief. And again,
definitely.
And it's just we look at what's been going on. With the S&P 500, I think again it's so important. From this high to where we are today, it's been 50 days of shit. And how often does that happen? Generally we're gonna get, like, take a look at what happened right here. This was 24 days of shit, and then we ended up getting a rally, that lasted about 2.5 weeks. So it's just about, I think, staying realistic about the fact that these markets don't move in straight lines. And so because of that, we could be due for some sort of a bigger relief rally.
Yeah.
I don't know if
the trend is still down.
Yeah.
So, if anything, it's going to be a relief rally.
Yeah. I don't know how much space the SPX has, though, because it's already, like, this was a really big relief rally that the S&P 500 managed to print right here, plus 18%.
Wow, 18%.
Yeah, and that was, I mean, to be fair, that was within 60 days. That was quite a large period of time. But I just don't see, like, another 18%. You know what I mean? Like, that to me looks a little bit unrealistic. It looks like it would be too much. Which I suppose could end up capping the downside, but I think this is really gonna just kind of depend on the dollar. But yeah, what this means for Bitcoin to me is I'm seeing a bit of breathing space for Bitcoin. I've been saying that for quite some time. A lot of technical factors are still pointing to Bitcoin dropping down, but that's because these are lagging indicators.
The biggest technical factor is most people. Let us know in the comments now, guys. Do you expect Bitcoin to pump from here or dump? Are you bearish or bullish on Bitcoin just now? Because you've got to remember that big psychological fact here as well. The markets are herd mentality, so the markets move with the herd. Yeah. So if everybody's bearish on Bitcoin, then like who's going to be there buying Bitcoin? Institutions maybe. Yep. But here's a fun fact, dude. Did you know that if BlackRock allocated 0.1% of its balance sheet, it could clear up every single Bitcoin off the exchanges? Like literally buy up all of the Bitcoins.
That's interesting. No,
That's crazy.
Know that. They're very
dump,
big.
Bearish, dump, bullish. Of course, I am very bullish. I just want to make this clear on Bitcoin. Like Bitcoin is one of my favorite asset classes. Like crypto is, like I say, guys, this is my religion. I love crypto. But long term, absolutely, Bitcoin is an incredible investment. And if you hold Bitcoin long term, you just can't go wrong. It's impossible to go wrong. Not financial advice, but short term, I still believe, by the way, in these the 4-year cycles, 2-year bull market, 2-year bear market. So they are intact if you take a look at the charts over the last 10 years. But as it stands, the trend for Bitcoin is down. But I'm pretty convinced that we are going to flip 20k as resistance.
You mean kind of something a little bit like this?
Yes.
Okay. Yeah, it's not been done yet, surprisingly. We're just kind of... It's really weird. This area, this $20,000 area has almost just become a box. I don't even want to draw a line. It's more like this. Probably needs to be a lot narrower. Something a little bit like this. Remove the line. And this is... I mean, it is still support. This is why I'm retaining my perspective here of just kind of somewhat bullish, because we haven't, like, on any large time frame, we haven't actually failed this area yet. Like, we haven't seen a big drop. So to me, it's still support.
And it's still a 3 times discount of what it was.
Oh yeah,
not so long ago.
Yeah. We're still down by 70%. Yes, obviously, I think we could drop lower, and I think if we do drop lower, we're going very low because we just don't have support.
We get thin air. There's no technical structure in between where we are now and 13.9k. I think the VPVR is also pointing. Pull up the VPVR. See where we're sitting at. Yeah, there we are.
Yeah, there's nothing until basically 12.
Air.
Yeah, and again, like this is extremely fruitful. For trading. You guys know the deal, by the way. If you want to jump on Bybit and trade this alongside probably what I would end up doing, check it out with the link in the description. You're going to get like $4,000 for free that you can trade with as well. BitGet offering you $8,000 as well. I'm not going to plug this for too long, but it's well worth checking out if you guys haven't already done this. These offers are time limited, so you're not going to be able to have them forever. Go ahead and check them out in the description if you want that free cash to trade these moves right here. But yeah, absolutely nothing. Absolutely nothing. Basically, as Crypto Kirby says, a trapdoor, that could open up for the market to drop down. I saw an interesting comment here. Somebody mentioned that Bitcoin seems to be struggling to break 20,200. That's precisely my point here. That's exactly why I am paying so much attention to this, because if we're struggling to break this area and then we break it, where is the excess supply going to continue to come from? I feel like as soon as we're able to get above this green line, and we're so close to it right now, like, yes, it is resistance, so we should be dropping down, but as soon as we get above it, if we do, I think we could be looking at another quite big pump like this, which absolutely could mean that it gets stopped in its
long
tracks.
position.
Yeah, it could turn into a very nice long position if we just kind of pump up the way we did last time. That's still a 12% move. Leverage that up even 2-3x. You're looking at quite a nice gain right there. And it could still stop in its tracks just very quickly, like the previous one did. We might even stop a little bit earlier. But seeing a nice big pump here, I think, would start to make a lot of sense. And this is happening in line with the S&P 500, which still hasn't actually closed. We've got another 90 or so minutes on this market until it closes today, and the dollar, just continuing to drop. I mean, to me, this is the classic setup for Bitcoin to have an opportunity to pull something quite impressive out of the hat. And if we do, crucially, let's bring it back to the BLX chart. If we do something like that, that's going to start to look like a potentially, fairly substantial next bounce off our support area. So that is also something which I'm going to be paying attention to, because if we're able to get a nice bounce off the support area, now these theories of, are we in a double bottom kind of thing, we can maybe start to give them a little bit more credibility. So that's also exciting. What do you think about all of that?
Yeah, I'm just thinking, like, the nice thing about these market conditions, regardless of the fact we're in a bear market, like this is my head saying to me just now, is, you can make money in these market conditions. Like, volatility is how you make the money. You can long, you can short, and you've got all of these nice opportunities, these big price swings. So it's a beautiful time to be in the markets, isn't it? Because like so many opportunities and like these huge big gaps. Like if we do break 17.5k and we do go down, like what a short position that would be.
Exactly. And it's the same thing you were talking about for gold, by the way. Like gold's got the same trapdoor kind of situation. Someone was asking for some more short-term analysis on gold. We already covered a little bit of this, but it's got similar setups right here. Like if we end up dropping, there's nothing that happens between 1700 and 1570. So this is an easy drop. This is an even easier drop from 1570 down to 1370. Absolutely nothing going on. A little bit of a bounce range potentially at 1460, but there's just not really, these are great trading opportunities. And of course, this is all even more exciting on the flip side, because imagine we drop down here, we'd probably drop down very quickly, which means we might be able to rise up very quickly as well, which is the same picture for Bitcoin. If Bitcoin were to drop down to say $12,000, $13,000, guess what, guys? There is not much resistance between those levels and 20,000, and between 20,000 and 30,000, or I should say 25 and 30,000, for example. Again, there's not a lot of resistance. The market can close these gaps really quickly. All we need is a little bit of bullish sentiment, and I think people forget about that at times like this. It's actually the first thing that I was reminding all of you guys about when this big market crash was happening right here, was that it doesn't matter the fact that we've dropped down so much and so hard, because the market should be able to equally close that gap very quickly, just like it's done every single time. It's normal for
Bitcoin. Like we're due an 80% correction, 85. What's 85% down from the all-time high? Where does that take us to?
That's a good question. Let's see. 85% down is $10,000 on the dot.
Oof.
It's quite exciting. Quite exciting. Yeah,
that's crazy. But Bitcoin, it has these corrections. It has these corrections at every bear market. But you want to buy the blood on the street, buy the fear, and sell the greed. That's the only way to make money in these conditions. Sell the euphoria when everybody's shouting. That's your Uber drivers talking about buy Shiba and all these meme coins. That's the time when you want to be selling the market. So I mind Business Insider, they interviewed me back in December, and I said, guys, this is the top of the bull market. Like I called the top of the bull market back in December. I said, I'm out. I'm going to be selling all of my positions. I said,
I remember this. I thought you were crazy.
I
saw this on your Instagram.
That's right. Yeah. We're speaking about it at your villa, and I said we're going down to 10k, guys.
Yeah. I remember this very well.
And you said, no, we're going to 100k.
Good call there, man. Good call there. That was impressive. Wow. Yeah, we were sat at my villa. This was like fucking 9-10 months ago. You can't make this up.
It's crazy.
And Ken and I were like, we were kind of hashing it out, and I was like, no, it's but here we are. We're not there yet, but obviously it looks way more plausible that it can happen now. Good call on that.
We're sitting there with your man Andrew Tate, which
Yes,
is
we
awesome,
were.
and he's going to be in Dubai, I believe, doing a speaking engagement
in a couple of weeks.
couple of weeks time. It's going to be good fun.
Yeah, that would be interesting.
Yeah.
Where is he doing that? Is there any
I'm not
details?
sure, but it's going to be like a live event. It's going to be streamed and in person.
Nice.
So that'll be
That's
awesome.
Cool. It's going to be interesting to see what happens with this persona in this city. Anyway, I don't want to get into that subject right now. Guys, what I'm curious for right now are your final questions. This is the first time I've had Canmac on the show, but with your presence and your optimism and so on, not even optimism, what's the word I'm looking for? Your enthusiasm. I hope it won't be the last.
Yeah, I would love to be part of what you're doing here and help as many people as I can, give some insights, and at the end of the day, it's just opinions. I'm just giving opinions based on experiences over the past, but if it can be of value to you guys, then I'm very happy to be here and sharing it with you all.
Yep, absolutely. So I'm just curious to know from you guys if you have any final questions for myself, or more importantly for Ken. Let's get them dropped down here now. We'll wrap up with a few of these last questions. And before we get to that, just while people are dropping those questions, I've had a few people asking for those books. So you mentioned a few books.
There is one book I've got in my bag. In fact, let me just grab it just now.
Yeah, here you go. Just keep this under the camera in case it's something you don't want to show.
So here we are. Here's a good book. I bought this the other day. It's by one of my favourite authors, guys, by Robert Greene. It's called The Concise Laws of Human Nature. Okay, this guy authored a book called The 48 Laws of Power, which is absolutely unbelievable. In fact, this book is banned in some countries. The information and knowledge in that book is so powerful. But I highly recommend that you guys read The 48 Laws of Power, The Concise Laws of Human Nature, and definitely give this guy a follow.
Nice one. So I'm not seeing any new questions. Someone's asking for your favorite altcoins. I don't know if you're into altcoins.
This would be a little bit biased, but we've just launched our own coin for our platform called Acquire Finance. So it's one to keep an eye on, of course, for the future. Acquire ACQ token. You can get it on KuCoin. This platform is the first M&A platform in the world where you can buy and sell crypto companies with crypto and on the blockchain. And we're fractionalizing the ownership of real world assets. So we're actually fractionalizing companies. So ownership of companies. So you can actually own companies with your crypto in the form of NFTs. Real estate, gold, silver, diamonds, watches, you name it. So these are going to be inside the investment pool. So as the platform matures, we'll be launching the platform in about a couple of weeks' time. That utility token is absolutely key to operate the investment pools. So as the platform matures, then as well, the token is going to mature as well. So very, very speculative, not investment advice, but that for me is my favourite token just now. I'm not saying buy the token, I'm just saying that's my favourite token because I'm putting a lot of time and energy into it. I also like Ethereum. I'm very bullish on Ethereum because Ethereum is going to be a big part of the banking system. So Ethereum, again, is a lot more legs than Bitcoin in terms of making profit. I'll certainly be stocking up on Ethereum as we go into lower territory. If we certainly go down to like $500 to $800 Ethereum, I will be stacking very, very hard.
Ethereum's chart actually looks to me a little bit more bearish than Bitcoin.
Yeah. It seems it's done the opposite of what people were expecting with the proof of stake.
Yeah, well that's to be expected, isn't it?
Like a buy the rumor, sell the news about. Yeah.
Yeah, it looks like another classic setup for Ethereum.
Bear flag.
This doesn't look good. Yeah, but that's not a surprise, really. I hope you guys weren't surprised by this. Like, if you've been watching my YouTube channel and this kind of thing on Ethereum surprised you, that's a little bit sad. You need to check yourself on that. Maybe unfollow some people and ground yourself in some healthier analysis because this was pretty obvious. Yeah, I mean, big things like, look, guys, when the average Joe thinks he's about to get very rich holding a fucking coin, it's like absolutely guaranteed to not happen.
Yeah, it's not happening.
I feel horrible for laughing, but it just this situation replays over and over and over. So that's something to keep in mind. One person's asking me, when I accumulate, do I sell my hodl stack and then hope to buy back lower, or do I not touch it? I just don't touch it. I just don't touch it. But that's me. I've got an extreme risk appetite, and I'm good. Like even if Bitcoin drops down to $3,000, I don't have to worry about money, thankfully.
Made a good point, Sammy. Made a good point. Risk appetite and emotions.
Yeah.
So you guys need to get your emotions.
Yeah.
Set.
I mean, and this is really hard. I mean, like, guys, I have no perception of how normal people gauge money. Like from age 15, I went from a $2,000 net worth to now, I won't say, but fairly high compared to 2000.
Smart man. Never declare your cards.
Yeah,
it's not. That's one of the laws inside the 48 laws of power. You see.
Yeah. So I mean, I've never, and I only got to where I am because I've had such a ridiculously extreme risk appetite. It's not for everybody. I don't have at the time I didn't have a family to support. I don't have children. I don't have a wife or anything like that. So I can afford and I could afford to be crazy that way. But not everybody is going to be like that, So I'm telling you guys what I'm doing. I'm absolutely not saying that you should do the same thing. I don't necessarily even think that these are necessarily, super good ideas, but it works for me, and I'm comfortable with it. I understand the tech behind Bitcoin very well. I love the philosophy behind Bitcoin very well. And yeah, someone's asking, how do I make most of my money from holding? I made most of it from trading, and rolling different revenue sources back into the market. That was trading and investing, big moves. So you guys know me as a derivatives trader. That's obviously my main thing. But most of my money came from the bigger moves. So that's kind of like Bitcoin into Ethereum, then Ethereum back into Bitcoin. Those really big moves that you guys have heard me talking about inside of Four Flies VIP with these steps on screen. That's kind of where they're really big. And that's just because I'm able to put so much more capital behind those ideas. So let's see. I don't think we really have any new questions.
I think a good book as well that everybody should be reading is The Bitcoin Standard.
Yeah, fairly, again,
Fantastic
compulsory
book.
reading if you're in the space. That's The Bitcoin Standards is an important one. Any final remarks?
Yeah, just touching on the emotions. I think mastering emotional intelligence, social intelligence, is definitely a step in the right direction, and that's it comes hand in hand with trading in the markets as well, and just detaching that emotion from pieces of paper. People get very emotional when they see money, very emotional, and in fact it causes the highest number of divorces are caused through money problems.
Damn.
It's crazy. Yeah. Very, very sad.
Well, I remember when I first started to make money, I was talking to, you guys know that I love Crypto Kirby. He's another YouTuber in the crypto space, and I was talking to him about, like, I said, I made a bunch of money today, and I said to him, what's wrong with me? I don't feel anything. And he said to me, when you start making money in big amounts, the only way to kind of I'm paraphrasing a lot right now, but the only way that you can kind of keep that up is if you don't feel any emotional response to making a lot of money or losing a lot of money. You shouldn't feel anything to either of those situations, and then you're going to be on the right track.
You're speaking my language, my man. So if I make $1 million, I'm going to kick it back, smoke a cigar.
If you lose $1 million,
I lose $1 million, kick it back, smoke a cigar.
That's it.
And be happy.
Yeah, and that's the only way that I can think to summarize it. But how do you get there? I don't know. It's almost like a switch, right? I don't know how you can just, if you're not there, how do you put yourself in that position?
To make $1 million?
No, to not care. You care, but to be emotionally unaffected from a gain or loss.
Yeah, you're alive. That's the beauty of not going all in. You've got your reserves, you've got your...
So it's about risk management.
Risk management, yeah. So you've decided to risk, say, 100k or whatever it is you're risking, and you've lost it. Okay, I'm alive. I've got my knowledge. I have learned a new way of how not to do it.
Yeah. That's actually, so when people join the Four Flies VIP group and so on, this is one of the first things I talk about is the best way you can insulate yourself from feeling anything, whether it's happiness or sadness, is to drop how much you're trading with. And you're just like, the lower you go, the less likely you are to care. And eventually, it won't matter. Some people have problems where, you know, you could trade with $10 and lose it and you'd be upset. Okay, that's different. But most of you don't fall in that camp. Most of you, if you keep dropping what you're trading with, eventually there's going to be a number where you're going to stop being emotionally affected with the outcome. And that is your happy spot. That's where you can make your best decision.
Be a man, don't be a baby. Don't be a crybaby.
Fair enough. Summarizes it
just
easily enough.
Just be a man. Just be a man.
Ken Mack, it's been a pleasure. Good to have
Be
you.
a man, don't be a little bitch.
Good way to round it off. I like that. Thank you so much for coming
pleasure,
on.
brother.
Once again, guys, in the title, Ken Mack Show, you can click on that to go to his YouTube channel down in the description. His Instagram, Facebook, Twitter, TikTok, all down below. So go ahead and check him out. And if you guys want to see him again on the show, do me a favor, throw a huge, huge thumbs up on this live stream. Double check that you're subscribed, that you've got the bell icon checked and all that good stuff. You've got all these great bonuses right here with Bybit and BitGet, over 10 grand in bonuses. You can trade with this money on Bybit as well, $4,000 that you can just get credited straight into your account and trade with. And if you want to jump inside VIP, you already know the deal. There you go. Hope you've enjoyed this one, and we'll see you all in the next one.
Love you guys. Peace
Cheers.
out.
Bye.